Hello, and welcome to the Invest with Carl podcast. I'm Jamie Effenberg, your host and a member of the Carl team. And today we are speaking again with David Bush, who is the strategy manager of Carl's Victory Peak Fund. And he's going to give us a mid-year update. We're going to talk about how the fund's been doing, what he's seeing in the market, and what we, might project or look at for the rest of the year. So David Bush from Alphatative, it manages the Stratversify Enhanced Quantitative Hedge Fund strategy, which was the basis for Carl's Victory Peak Fund. He's been self-employed for over 35 years. And years ago, he was a professional musician. He worked with Grammy Award winning and nominated artist. He also sharpened his investment savvy, becoming both an independent trader and investments educator in the US and the UK. And today, obviously, he focuses on Victory Peak. Welcome, David. Good to have you on the show today.
Thank you, Jamie. Great to be with you.
All right. So Victory Peak has been running. Remind me again, when did we go live? It's been...
I believe April 1st, if I'm
remembering correctly. Yeah, it was the spring. Yeah. So we haven't quite been 6 months, but you're kind enough to talk about what we've been looking at.
Sure.
Yeah. So how's the fund been going? How's it been?
Yeah. Well, obviously great to be on the Carl platform. That has been a highlight of the spring. In terms of, fund performance, year to date, the first half of the year has been characterized by significant multi-week periods in which, interestingly, the Nasdaq 100 index has underperformed the S&P 500 index for a multi-week period. So that's a bit unusual. And with our universe split really between the Nasdaq 100 and the S&P 100, it's actually a combined universe of both of those. These periods this year too, in fact, where you've had multi-week periods, 4+, I believe, are a bit unusual, and that's affected our performance. So we're a little bit behind where we normally are year to date. These periods are unusual. I think the last one was the fourth quarter of 2018, which was quite a rough period, which we're not seeing at the moment. But I think in the last 5 years, there have only been these three periods, twice this year and one in 2018. So at any rate, that has had a little bit of an impact on our performance year to date. But that said, we've got a very long track record. Even though we're new to Carl, we have a long track record. We've been here before, and we've been able to finish every year positively. So I'm expecting solid performance and performance to pick up, and just solid performance by year end. A couple of things related to that. November is our third best month performance wise of all our months, and our second highest positivity rate if you go back the full track record.
Oh, like every year?
Say that again.
So like every year, November is it's kind of the shining month?
It's our third best month annually. So if you look at all of the months and their performance individually, all Januaries, all Februaries, and so on throughout the year, November comes in third out of the 12 in terms of performance. And, that's not, of course, predictive, but it is a tendency that we do well. Strong year end, November in particular, and it has our second highest positivity rate, meaning look at all our Novembers throughout the track record, and it is, I think, only second to April, if I'm remembering correctly, in terms of our performance and our ability to turn in a solid positive month. So, at any rate, just to kind of bolster, our view that the
rest of the year has some still great opportunities ahead. Is that?
Yeah, certainly, absolutely.
Okay. Yeah. So if you could, give our folks, I don't know if they may or may not have listened to our last chat. So why don't you give us just the 60 seconds as a reminder of how the Victory Peak Fund works. And then since, you're kind of saying there's been some unusual markets, haven't seen it since 2018. How do those systems handle these types of markets? And, are they expecting more, expecting less? What do you think the systems will do as they move forward through the year?
Sure. Well, first, let me speak to the kind of overview of the strategy.
Yep.
And you're right, we have spoken that before, but just for those who aren't familiar, Victory Peak is a long short equity strategy. It trades individual stocks, and again, S&P 100 index and Nasdaq 100 index. When you combine them, you get about 185 current constituents typically. We do also have some hedge vehicles, meaning ETFs or ETNs, that are not typically traded, but occasionally traded, and those have served us well in periods of market distress. So that is also part of the strategy. The strategy is essentially mean reversion on the long short equity side, meaning longs and shorts. All of those systems, there are many systems within the strategy. They are all mean reversion. We do have a vol cap or volatility capture program as well that is designed to capture volatility breakouts. That is more of a momentum system as opposed to reversion, but all together they work together under a governing set of risk controls, and that's it in a nutshell. In terms of what drives the positions, the returns, and so on, the factors are all technical factors and not fundamental factors. So that really is Victory Peak in a brief nutshell.
Right. And overall, the strategy looks to give, if I remember correctly, you look to give like index-like returns with basically lower risk, right?
Right. That's
or
correct.
Better risk controls.
Exactly. So we do exactly what you just said. We're aiming for market-like returns, hopefully beating the market over time, but with a fraction of the annualized volatility. So that is certainly the objective.
So you mentioned that there are hedge systems in there as well for market distress, but those haven't kicked in this first part of 2021?
Not too often. No, not in any dramatic way. They did kick in a dramatic way last year during the onset of the pandemic. That produced one of our best months. In fact, we had a couple of our best months within a 3-month period, in fact. But this year it's been rather light. So yes, They have kicked in certainly once. That was within, I believe, the last couple months, but I have to look at my my data for that. But at any rate, activity has been rather light, although you may have just asked me as a second part of the question about market activity. And, our analysis does show us some negative expectation for the Nasdaq 100 index. So, I can speak more to that in depth. Our strategy right now has generally been in a lower exposure position, less exposure to the market. Some of our many systems have refused to take long exposure, but only recently.
Yep. Yes.
And yet that's changed a little bit. Even in the last 48 hours, we're taking a little bit more exposure, meaning that the strategy is seeing more opportunity. But it's an interesting moment. And our analysis shows us that based on some recent technical action for the Nasdaq 100 index, as well as the Nasdaq composite, I did another test related to that, that shows a little bit more of a push higher. If that were to happen, would see not necessarily a lower Nasdaq in the next 3, 4, 5 weeks, but the expectation is negative. So I can unpack that a little bit if you want.
Yes, well, I'll mention that you're not the first manager that I've talked to outside of podcasts that have said like the strategies have been very conservative. They've sort of been waiting for risky. They've been risk averse in the first half of the year, and also exactly what you said, that they're like, well, we're starting to open it up. It looks like it's going to start to open it up a little bit, and they're not expecting a severe drop anytime in the immediate future. Not that they're not ready for that and they're still looking for the signals, but they might take a little more long position. I think listeners would love to hear, because my question for you is, so, what is it? And you don't have a crystal ball. This is all just chat about what you're seeing, but what are the factors impacting the Nasdaq, and where do you think, how do you think it may go forward in the next quarter or two?
Sure. Now we are sitting here doing this at the end of the week. When folks see this, perhaps.
Yes, it'll be after the fact.
It'll be after the fact. It's a little bit dynamic, kind of by the day right now, but I'll try to, make it relevant, describe it generally. So, we're seeing a Nasdaq 100 particularly, which has, pushed higher and recently achieved within the last, I believe, 2 or 3 weeks, not looking at that data at the moment, but I think it was 2 weeks ago, perhaps, achieved a technical position by our analysis that has typically led to a negative expectation, or has a negative expectation. And so let me describe that. So based on this, data, this analysis, the probability of the Nasdaq, let's say, closing higher from that signal a couple of weeks ago, over the next X number of weeks. So 2 weeks ago plus another week plus 3 weeks, 4,
within weeks.
Go out several weeks. Many of those weeks had actually a negative expectation, even though the probability of the Nasdaq being higher than 2 weeks ago was over 50%. So in other words, the probability in terms of a higher Nasdaq was slightly, greater than 50% in most of those weeks. In fact, all of those weeks, if I recall correctly. However, the expectation is negative because when the Nasdaq has corrected from this technical state, it has corrected pretty sharply, which leads to actually a negative outcome, despite the fact that it usually doesn't happen. So it's one of those scenarios. And so what it means for Victory Peak, to make this relevant to our strategy, is that the systems have many drivers, our model. It's relatively simple, but it's sophisticated. And in terms of, the sophistication element, there are some risk-off elements to the systems and to the strategy. So those are kicking in many of the systems, which I alluded to earlier. So several of the systems are refusing long exposure right now, based on the market state relatively extended away from various means that the logic tracks, that we track. However, there is some long exposure. There's currently some short exposure as well. And we even have a kind of a light hedge in place together with it all. So basically, if the Nasdaq were to, and the market generally were to correct sharply, what would most likely happen is, we'd have a lower exposure position. We do have a hedge element that should be protective. Also, this could create new opportunity on the long side, with more systems able to take on new long exposure. Additionally, not to make this overly complex, but if it were a sharp enough correction, then our volatility capture systems could potentially kick in and add that protection. Add to it, right? So that might have been clear. It might have been a little bit confusing, but that's the many different pieces to the strategy.
Yeah, and it's correct me if I'm wrong. What I'm kind of hearing from I'm going to generalize it, right? I'll make it really simple, maybe, and you can tell me if I got it right. But it's sort of like the strategy is actually taking multiple positions and not overly committing to any one yet, and is awaiting for more signals to maybe pile on more into one direction. But you're ready for whichever direction the market may go, because it's just still a little bit, it's not the market doesn't seem, it's not committed in a particular direction at the moment.
Yes, and a lot of that I think was well said. There is in our strategy, just to give a little bit more color to it, there are no concentrated positions, at least by our definition. There are no over 20% positions, so we're never looking to get overweighted, into one big, large concentrated position. But exposure is variable within our strategy. And that's based on the opportunity which the logic defines. So the exposure will be variable if we are in a very clearly technically healthy market that is not in any kind of extended state, which many of our systems view it as currently.
Yeah, right. If that could be going on too long.
Right. It's more willing to take on more exposure. If if many of the systems see the market position in many of the tradables, the constituents that in our universe, as technically extended as well, they will cease taking long exposure. So that's the dynamic that I've been describing that's already in place currently, at least at the time that we're recording this. And and with the Nasdaq having just pulled back a little bit over the last day or two, we're starting to see a little bit more exposure, but it's still just a fraction of what we might normally have in a more
healthy, robust
market. Yeah, so it's a very interesting moment right now here in July. Things somewhat quiet. Futures are often quiet coming into the day. And yet, quiet markets often become exciting markets very quickly. And to your point earlier, by design, we attempt to navigate all scenarios.
All the markets, right?
Yeah, we do have a relatively nimble strategy, I believe. So it aims to be able to react pretty quickly to shifts in the market. Obviously, historically, we've done a good job of that, sometimes better than other times, but that is by design to be able to shift relatively.
Yeah, I mean, that's what you were correcting what I said before. It sounds like is that like, well, you're never really overcommitted. You're always ready to take advantage of any type of market, which I think, is highlighted by you have quite a few competing systems that are running and evaluating what's happening in the market every day. So definitely would want to remind our listeners that this is a point in time. And to take David's point, like the systems of Victory Peak are ready to maneuver they're reviewing activity on a daily basis. So of course, we're just taking a look at how it's going today. Anything else our listeners should know about Victory Peak as we move into the second half of 2021? Oh my goodness, 2020's gone.
Sure. Yeah, it's easy to do this odd sense of time we've had, kind of the world in suspension in some respects, even as we're all very busy. But yes, 2021, the rest of the year. So currently, the strategy has a semi-defensive stance, as we've kind of been describing, or I've been attempting to describe, that if the market is to push higher in the near term, we expect that to continue. However, that's a relatively short term phenomenon, days to handful of weeks typically. We do expect and anticipate, more exposure after, especially given a market pullback. Again, we have, at least at this moment, we have a negative expectation for the Nasdaq. Doesn't guarantee that it will move down, but that is the probability.
Just an outlook.
That's the outlook, right? So that would increase exposure, but at lower levels where we would want to have more exposure. And as I described, in terms of the strategy dynamics historically, obviously, past performance is not indicative necessarily of future performance, but we do have,
Thank you for that.
Yeah, you're welcome. But
regulatorily,
we have good, tendencies to finish out most years fairly strong, and we're expecting, certainly with the more greater volatility that we do expect in the second half of the year, that
Absolutely.
will also produce more opportunity that our strategy and the systems within it will be able to capitalize on.
Yeah, that's great. And I think everyone's expecting there'll be more activity. I mean, we're in the summer. everything slows down a little bit. So the fall will be very interesting to see which directions everything goes and how systems, react and take advantage.
Right.
So David, thank you so much for being with us today. It's great to hear how it's wonderful to have Victory Peak on the platform, and we look forward to the months and years ahead and the performance.
Jamie, thank you so much. Pleasure to be with you, and look forward to the next time.
Yes. Thank you, all of our listeners, and we'll see you next time. All right. Have a good week.
Thank you.
Thank you for listening to the Invest with Carl podcast. The views shared on this podcast do not necessarily reflect the views of Carl. This podcast is intended for informational purposes only and is not intended to constitute and should not be deemed to be an offer to sell or a solicitation of an offer to buy any security or investment, financial advisory, legal, tax, accounting, or other professional advice. Carl funds are currently available to accredited investors with a minimum investment of $20,000. To learn more about Carl and to download the Carl app, go to investwithcarl.com.